Go. Okay, everyone, this is Michael Camo of Minyanville, and I have Sean Udall with me, and we are going to talk tech stocks for the next 45 minutes or so. So if you have questions, please enter them in the chat. This webcast is being recorded, so it will be available later. So let's just get right into it, Sean. We're seeing techs coming under pressure, specifically the semiconductors down about 1.5% today. What do you think is going on?
Well, you know, to me, this sell-off looks very similar to, I don't know, 3 or 4 or 10 of them that we've basically had since mid-2009. And you know, every time the market gets hit and the risk-off trade comes back, the semis always get hit. I think one thing that's a little bit different now is there's just been so much fear about you know, low PC sales and all the downgrades you're seeing with Intel. And it seems to me that a lot of semiconductor stocks are getting hit with sort of the Intel broad brush. So whether it's a Qualcomm or a Broadcom or a Skyworks, which really don't have a lot of content in PCs or that food chain, they're basically all going down the same. So whether it's the SMH, the SOX, or whatever semiconductor index you want to see, it's sort of hard for the communication semiconductor companies to have a 1 or 2 or 5% update when the index is down, you know, 1.5%. So it's just kind of part of the risk-off trade and the corrective activity that we tend to see. I mean, the other thing too, in very brief, is we are in earnings pre-announcement season. So you know, before the Apples and the Googles and the big companies report, really the first week of the quarter, which only has Elko and a couple of other companies report, is usually the worst for earnings pre-announcements in the tech sector. So we've been hit with a few of those recently too.
So do you think this is any different than last quarter? Because I feel like last quarter we kind of had the same thing. We had Intel, Texas Instruments. I actually think Avnet did blow up last quarter too. So I mean, does it kind of feel like the same we're going through the same situation now?
It does. You know, the only main difference is the overall levels of the indices were quite a bit lower going into last quarter. But effectively, the last 2 to 3 weeks, and we've effectively been correcting for about 3 weeks, especially away from Amazon, Apple, Google. So you know, the semis and some of the small cap indices have kind of been lagging for about 3 weeks. And again, that's almost exactly what you saw heading into last quarter. And then, you know, going into last quarter earnings, we had a lot of fear. A lot of people thought, oh, this is going to be a big earnings deceleration quarter. It turned out to be okay. I mean, you're not going to have blowout earnings in muddle-through economic conditions, which is what we have. But we also don't have recessive conditions, which seems to be sort of the argument that occurs every quarter.
Okay, well, I'm going to move this on to our next slide because it kind of ties right in, because basically your third quarter review is low expectations and kind of everyone expecting a dip.
Yeah.
So why don't you talk about that a little bit?
Well, I mean, last quarter set up really, really well. So, I mean, the thing you always want to see going into an earnings reporting period is really low expectations, and the lower the better. So, you know, last quarter we had a pretty big correction coming into the quarter. I think the broad market was probably down, you know, 15% off of highs. You also had very low earnings expectations, even for like Google. So about the only company that had huge earnings expectations was really Apple. And so basically what happened, I mean, you know, we've talked about Fusion.io a lot. I mean, you know, I wrote a lot that the stock was being just absolutely victimized by the IPO lockup and just some other trading dynamics. You know, that stock went from 33 to 18, and they blew out numbers, right? And so a lot of people were trying to say, oh my God, a big miss is coming. It didn't happen. Juniper didn't have a great quarter, but it was good enough to make the stock go from, I don't know, 14.5 to 19. Riverbed went from 12.50 to 20. So again, you know, stuff got really, really cheap. The difference going into this quarter is Riverbed's at 21 and not 12, and Juniper's at 16.5 and not 14, and Google's at, you know, 700 and change and not 550. So some of these stocks have held on to pretty good gains, while a lot of other names have sort of taken it on the chin.
Mm-hmm. Okay, well, speaking of Google, let's go right onto them, because it's probably one of the most widely held stocks out there, especially in tech.
Sure. So, you know, I mean, I've had a very consistent theme on Google for a long time. In fact, I started writing for the Buzz in, I think, mid to late 2007. And at the time, Apple was my favorite company. Google was my second favorite company. Frankly, Google's kind of been making shareholders suffer for a long time. So it's offered a lot of trading opportunities. In the meantime, I think that one of the most important things for Google coming up is maybe last quarter provided a key sentiment change. And you're hearing about that, Cramer's been on TV saying he favors Google over Apple now. I've actually been saying that same thing for about a year. Now, I'll admit I'm a little early because Apple's up 60% and Google's up 20%. And again, those numbers are rounded. But so I really do. I think sentiment might be changing for Google. I also think mobility is very underestimated, and the whole thing with the migration of search from desktop to mobile devices. And Google basically owns that market, and I think they're going to show the power of mobile monetization over time. So
how do you compare Google to Apple, like say 12 to 18 months out? What do you think will perform better?
Yeah, that's 12 to 18 months out, I'm probably going to favor Google. If I could go 1 to 2 quarters out, the setup again for Apple's not that bad. Again, the stock just had a 10% correction. Apple is going to have absolutely 2 monster quarters. So it's not so much the current quarter that is going to be that great for Apple, but they could have a very, very good Q4. It could be a Q4 that includes not just the iPhone 5, but an iPad mini, an iPad that's still selling well, and a computing line refresh. So I think the next 2 quarters set up really well. The other thing is, over time, I get a lot more worried about Apple when I can go into stores or hear about the fact that you can go into stores and they have 15 or 20 or 50 phones available. When they literally are selling out every morning, I don't really focus so much and say that's a huge supply problem. I think it's just the demand's still really strong for the product, and they're selling all they can build, and that's generally a good problem to have.
All right, so why don't we move on to, everybody loves Google, a lot of people love Apple. Now, one stock that not everybody loves is Facebook. And,
yeah.
We've had a negative Barron story. Analysts are cutting their price targets. We're a couple weeks away from the quarterly earnings. What do you think of Facebook right now?
Well, I'm probably one of the few people that sort of believes in Facebook. So, my thesis on Facebook is fairly simple. I think there's a lot of comparisons to Google in the early days. Now, Facebook took a lot longer to become an IPO, and you and I have talked about this. They really should have come out as a publicly traded company at least 1 year earlier, if not 3. And then investors could have ridden a nice growth trajectory for quite some time. But, I really think Facebook's going to be number 1 or number 2, probably number 2 in display ads. They've been number 1. Google just overtook them in that position. The other thing I think people very much underestimate, in other words, the thing that everybody worries about with Facebook is this whole migration of desktop to mobile. And that's really the best thing for Facebook. And I think you're going to see Facebook sort of be the global number 2 in mobile monetization. And that can occur in a lot of different ways. My only real concern would be, are they going to try to monetize way too quick and hurt user engagement? There's been a lot of criticism and people saying they've been doing that exact thing. I don't know if I agree with that. The other thing, kind of thinking back to why I like Google back in 06, 07 and before, and some of the parallels to Facebook today, one thing Facebook does not try to, they're not trying to maximize every single bit of sort of revenue and EPS. They've got a lot in reserve. So I think that over time, they're going to be able to have this nice steady ramp. The one thing I'll add, if Facebook shows any signs of re-acceleration of revenue, the bears are going to be just in huge danger, even with the coming lockup. On the offset, this is probably a fairly dangerous quarter. I would not say that I have a full Facebook position. It's one of my larger positions, but I am definitely prepared to increase my Facebook position by 30 or 50 or 60% if the stock were to get hit hard. I think expectations are pretty darn low.
I would agree with that, but what's your time horizon looking like? It seems like you're not all that worried about this quarter. Like, it could go either way. So are you looking more out a year, 2 years for this big bump in monetization?
Well, as you guys know, I don't know how, a lot of my current subscribers and longtime buzz readers know that, I'm not, I don't set up and worry about every tick in a stock. I tend to be a little more longer term oriented. Now, I will try to do a lot of, let's say, multi-day to multi-week trades around core positions. But I'm looking at Facebook and thinking about what the next 2, 3 to 6 quarters are going to be like. So, I'm not going to make a stance and say Facebook is going to be blah, blah, blah in 5 years. But I do feel pretty good that the next 3 to 6 quarters are going to set up a lot, for example, quite a bit better than the last quarter did. I think everything sort of hit Facebook at the wrong time. They kind of got the perfect storm. They got a decelerating situation. The IPO was handled very, very poorly. They priced it way too high. So, I mean, we could talk a long time about all the things that they did, but that's sort of all, in the rearview mirror. So really, as long as they don't try to over-monetize and they don't try to squeeze too much out of things too quickly, I think the setup's pretty good for them. But, I'm not going to be 100% loaded for bear going into this quarter.
Understood. Okay, now, full disclosure, I have a very large short position in Facebook, just throwing that out there. Sean's obviously on the other side. Another thing we're on the other side of is PCs.
Well, our time frame could be different too.
My time frame is about 2 weeks.
2 weeks.
Tops.
Yeah, 2 weeks.
So why don't we move on to PCs? Why don't we talk about Intel and Microsoft? Intel's come under a lot of pressure. Microsoft's doing a little better. Like, what do you think of these two guys?
Yeah, well, so in the last 2 to 3 weeks, as this market's been correcting, and I have grown more. I mean, my few buys really have been Microsoft, Intel, Skyworks of any significant size, and so those are all sort of defensive plays for me. I guess this is one of those cases where, I mean, I can go out on a limb and say, a year ago everybody was wrong about Google. There was all this talk about deceleration and the story is not the same. And this is one of those situations where I think it's pretty easy, but the rest of the world basically hates it. So, everybody's hatred for Microsoft and Intel is basically at its maximum right now, at a time where I think people should be looking at these names and looking at everything going on and going, wow, this actually might be the time where the setup's better than it's been in quite some time. You and I have talked a little bit about there is a PC cycle, and there's definitely a Microsoft upgrade cycle, and I think a lot of people might not really think it matters anymore. But when Microsoft releases major new Windows platforms, you always get, and I wrote a note about this today, you literally always get the worst quarter for the sector in front of the quarter where they're going to launch. And then the prior 2 or 3 quarters ahead of that last quarter prior to launch are not very good either. And so that's exactly what kind of you're seeing in this food chain. So just to back up too, PCs aren't going to be PCs in the future. They're not going to be a desktop, and they're not going to be the old laptops we remember. There's still going to be some of those things. They're going to sell really cheap. They're highly commoditized. But what new PC is going to be are going to be tablets. They're going to be Windows 8 convertibles, which is what I like to call tab tops. It's the form factor I think is going to sell the best for the next 2 to 3 years. It's basically a tablet-laptop combination. And then it's going to be Ultrabooks that compete with the MacBook Air. So I think what's going to happen is you're going to have much, much better sales of those type of PC products than you've had for the last year or two of the traditional laptop segment. And by the way, there is a ton of chip content in those devices.
Now, do you think PC sales have to actually be strong, or can the expectations seem so low? Can they just do okay? And do you know what I'm saying?
Yeah. Well, no, that's the beauty of the setup. I mean, if PC sales are actually strong, I mean, what kind of price target do you want to put on Intel or Microsoft? I mean, let's say PC sales accelerate and the adoption rate's really strong, and let's say that the Windows 8 sort of form factor for Ultrabooks starts eating into Apple's share. I mean, you can put a $50 or $60 target on Microsoft and a $35 to $50 target on Intel. I'm not expecting that. That would be like the absolute dream come true for these companies. But the setup is so poor, or everybody believes that the outlook is so poor, that they can probably just do okay and just sort of see any sort of incremental PC growth. And so let's just put it this way: 2% PC growth probably translates to 8 to 9% earnings growth for both of those two companies.
Okay, and on a related topic, I feel like it's the same situation in mobile. I feel like expectations for both Intel and Microsoft are very low in mobile. Do you think they're going to have traction with their respective products in mobile?
That's a tough thing. I have written that I think Microsoft could become the #3 player globally in mobile. The problem is that #3 position really worth anything, and do they make any money on it? Microsoft has so much money, and they have so much money committed to R&D that I don't think it's a waste of money, because let's say there's a big misstep by either Apple or Google. All of a sudden, Microsoft Mobile could come in and fill the void and do something surprising. But the mobile thesis is not that great for Microsoft. Now, Intel's a little different. Intel has a very good small form factor chip fabrication, 22 nanometer. You've heard about Qualcomm's 28 nanometer, and forget about the technicality. This is just the smaller you can build chips and the faster you can make them. Basically, the less power they take, the less heat they produce. So the smaller the chip with the same speed, you get really good performance and better battery life and all that stuff. Intel does have a pretty good chip coming out, and they're starting to win some Android designs. So I still don't see them beating Qualcomm, Broadcom, and my favorites in that space. But they could grab share that they basically have none of right now.
Now, just one more question on Microsoft. Do you think, you see products like the servers, do you think it would be smart for them to make their own all-in-one products rather than partner with all these random hardware companies? Do you think, the going in alone would be smart for them?
Yeah, so you're talking like the Surface tablets and things like that. I mean, I almost think Microsoft feels forced to do that. I think if you had, Lenovo is going to come out with some really good products. In fact, they had a release today, but the Lenovo Yoga is a really, really nice Ultrabook that's going to be coming out. It's kind of in my tab-top category. But I think Microsoft's been looking at the OEMs the last 3 years and just sort of saying, we're almost forced to make products and innovative products because the OEMs aren't making them right now. So where some people kind of might be afraid that Microsoft might be alienating the companies that build their products, I think they kind of feel forced to do it. By the way, if the Surface ends up being a really good product, I think Microsoft might be making that product as almost, look, if you guys make stuff like this, we won't be forced to. But I think if you look at the success of Google and Apple, I think Microsoft's saying, hey, we can make this stuff too and make money on it. So again, they're almost, the market's almost forced their hand to do that.
Now, do you think that's like that makes HP and Dell sells? I mean, do you want to stay away from stocks like that on that?
Oh, in fact, I was tweeting today on HP and Dell. I mean, Dell's trading at about 2 times net cash. It's super, super cheap. I think Dell has a little bit better IT business. So, servers, consulting, data storage technologies, things like that, I think they got a little more leverage there. I also think Dell, I mean, if Dell hits on a couple really good selling products, they can ramp those products up very quickly, and their cost of production is still world class. But it's sort of like over the years, a lot of people have talked about, should you own some of these Apple tertiary plays or just own Apple? I've been more in the camp. Now, I have owned Broadcom and Qualcomm and done well, although those stocks haven't done nearly as well as Apple. So I think this is one of those cases, I think it's just easier to buy Microsoft and Intel than to try to hope that Dell and HP do really well. So I don't know. We'll see. I mean, sometimes it's just best to say you don't know. With Dell and HP, I'm sort of uncertain right now. I don't know if they go bankrupt. I also don't know if they really get enough growth to make them that compelling.
Okay, just want to remind everybody that if you have questions, feel free to put them in the chat section, and Sean he'll be happy to answer anything you have on your mind. So we're going to move on to the cloud, in VMware specifically.
Yes. So VMware, I mean, again, I would not, this company has sort of been a perennial beat earnings expectations, guide higher company. The guides higher have been a little less frequent, a little more, or let's say a little less spectacular because the stock has kind of grown into itself. But I still think they're the class in the space. Now, I typically don't buy VMware. I had it years ago. I usually play EMC as a proxy for VMware. In fact, EMC sold off quite a bit today and recently. If the stock were to get down into the 24s, that would sort of be my buy level again. And EMC, I don't know if everybody knows, they own roughly 80 to 85% of VMware. The stock, my favorite stock in the group, and the stock that had a huge earnings report last quarter, in fact, the quarter before, I'm still mystified that the stock went from 33 to 18, but weird things happen in the market. But Fusion.io, I think if you believe in cloud, if you believe in the migration of big data analytics and the use of big data analytics to monetize, and the use of big data analytics for competitive purposes, which I'm all over. I mean, that stuff has just been absolutely necessary. Fusion.io is a great place there. And Fusion.io is not a software storage reseller. It's a software and hardware combination, which makes it very unique in the space.
Now, I know that Fusion.io, they have very big business with Apple and Facebook. I think it's something like 60 to 70% of their revenue. So are you worried about that at all?
No, in fact, those numbers might be a little dated. What's basically happening with Fusion.io is that they pretty much started and just had Apple and Facebook as customers. And sort of every quarter that's gone on, they've added a lot more customers. I think last quarter, I knew these numbers about 3 weeks ago, but I want to say that they added 40 distinct $1 million contracts or more last quarter with non-Facebook and non-Apple customers. So the percent of business that they're doing with Facebook and Apple is still large, but it's declining every quarter. So that does make me feel better. If they were still 65 to 80%, just those two companies, I would be more. I still might own the stock, by the way, but I feel a lot better that so many people are using them. Here's more the critical thing: Hewlett-Packard does have an OEM relationship with Fusion, and that's their second or third biggest customer. I guess their third. But Cisco is going to start reselling FIO gear, and that may have just started this quarter. And I think put it this way: if HP is doing well selling it, I think Cisco is going to do spectacularly selling it. The other company that's selling it is Network Appliance. So if you think about this, you got HP, Cisco, Network Appliance. Those are sort of the three big boys in data storage solutions. They're all basically a Fusion.io reseller. So you can just sort of do the math and see the number of customers that they're going to be picking up from that.
What do you think about Salesforce? That's another one. It's trading at something like 100 times earnings, and it seems like it's always in that very controversial category.
It is.
But what do you think about them versus a Fusion.io or VMware?
Yeah, my whole thing on this, so what I do a lot, a lot of my work is relative valuation, and so every time I look at CRM, and I usually only look at them during like a big market sell-off, like the market's down 10, 20%, and they're down 40%. But when that happens, everything else is down too in this high correlation world that we live in. And so where I always come out is, well, I'd rather buy FIO, VMware, EMC, or some other high growth stock, Google, Apple, something like that. So what happens is, on a relative valuation basis, other names just sort of always rise to the surface over CRM.
Okay, so we talked a little bit about chips before, so why don't we move on to Sandisk?
Yeah. So Sandisk, I mean, this could be real short. Of all the sort of companies that I follow, there's a few that I think have a good chance of beating expectations. I would be very surprised if Sandisk doesn't sort of surprise and guide higher this quarter. They actually landed some Apple business in the iPhone 5, which was a huge surprise to me. That I don't know where they land. You know, I don't know if they're a second source or a third source seller to them, but they landed that business, which kind of makes me believe they might get some iPad mini business. But the biggest thing for Sandisk is they're moving into solid state storage in the enterprise, and I think that's going to start being a bigger and bigger component of their revenues and earnings. The margins are a lot better there. So this is kind of one of those names. You know, you've also had like the railroad industry of years past. There's just been so many names that have been taken out of the space that they just don't have quite as much competition as they used to. So over time, I think they're a survivor. The last thing I'll say about Sandisk, it's not on the slide. You know, for about the last year, I've kind of been wondering if somebody might come along and buy them, because there's just so much value that could be created. The other thing that Sandisk does, and I don't even talk about this much, they own a lot of intellectual property for this flash storage space. So you know, they got good margins there. But this one, I really, I mean, if Sandisk especially were to drop another 2 or 3 points, this would be a position I'm going to increase ahead of the quarter.
Okay, now, just very quickly on a related note, when you think about things like the iPad mini, since it's not officially announced, like how much weight do you put on something like that?
I probably don't put as much weight on the iPad mini, for Apple, for example, as I would have the iPhone 5, or if they actually do create a TV product. But I incrementally think the iPad mini is going to be a good product. I think, why not sell it? Here's the other thing that people don't understand with Apple. Apple always tends to be pretty good at figuring out what product do they need to phase out and replace. Okay, so the whole reason they created the iPhone, or one of the best benefits of the iPhone, is that the iPods were getting pretty long in the tooth, and so the iPhone became basically a better iPod than the original iPod. So I think now you have iPod Touches. Well, I could make a case that not as many people need those or want those, and people want bigger devices in their hands, but maybe kids don't want, a 10-inch tablet in front of them. So if you look at something like an iPad mini, my guess is that product's going to be used to replace sort of the declining sales of iPod Touches and iPods.
Okay, so why don't we, we're going to skip one stock and we'll come back to it, but why don't we go straight to Apple right now?
Sure.
They're reporting October 25th, and what are you looking for this quarter, next quarter?
Yeah, I mean, this quarter could just sort of be okay. Now, Apple quarter is still better than 98% of the companies that report. But again, the setup for Apple, I think they could have 2 quarters in a row that they have some iPad mini sales, iPhone 5 sales, good iPad sales, and so on and so forth. They might even have a TV product announcement, let's say, within 2 or 3 quarters, which I think would be very good. In fact, that's really, for me to stay with the stock and to continue to be bullish on it, I need to see a major new product probably within 3 quarters. So I feel very good about the stock for the next 2 quarters because I just think they're going to have, I think Q4 and Q1 are going to just be huge quarters. And I mean, you guys know how bullish I've been on Android. I mean, I made a very controversial call years ago when they had 3% market share. I said they were going to pass Apple and have 50% market share. Well, I've been wrong. They're actually up to 60% market share. But as much as I think the Android and the power of Android is spectacular, I still think Apple and Samsung are just going to sell more phones than anybody else. So I don't really see that changing for a number of quarters. So it's not so much this quarter, it's the guidance and what things look like for the next 2 quarters. And the stock's going to be halted between when they report the current quarter and when guidance comes out anyway. So in other words, they could have a muted quarter and a big guide, and the stock's off to the races.
Now, so do you think investors will kind of forgive whatever happened last quarter and they'll focus specifically on the guidance?
Yeah, I kind of think so. Now, again, Apple always tempers guidance. I mean, what do? They tend to guide about 20 to 25% below where they usually come in, and then the analysts have to kind of try to rejigger the numbers. But I mean, I think guidance sets up really well. And again, I still favor Google over Apple, by the way. I mean, Apple was my #1 position for many years. Around mid last year, it started becoming a smaller part of my portfolio. Still fairly significant. But again, I think the next 2 quarters set up really well. I do not have one of those $1,000 targets. I probably was one of the first guys to say Apple was going to be at $450, and this was probably back years and years ago when the stock was a $100 stock. But in this day and age, there's like 3 or 4 or 5 guys that probably have $1,000 targets. I'm probably more in the 745 to 825 count. Now, if they reinvigorate the TV industry, I would have to reassess everything.
Okay, and then we will move on to our final name, which is Cypress Semiconductor.
Yeah, I think we've pretty much included. I mean, they're reporting here pretty quickly. This is just—it's not so much a call on Cypress individually. This is just one of many semiconductors companies that have just been absolutely killed, really this year. But they've traded terribly the last few weeks. I mean, the CEO was buying this stock 30 to 40% higher, 1350 to 1450. He's historically been pretty good. So when he makes big buys of the stock, his timing tends to be pretty good. So even he missed this current move, which the stock's gotten pretty weak. But I think Cypress is a great example of sort of a mid to small cap semiconductor company. They're just hated right now. So, I mean, you know, anything's possible. I mean, you could have an implosion in Europe, or something weird could happen if there's a big 15–20% correction in the market. This stuff gets cheaper. But I mean, this stock is just what I would call something that's in deep value territory. I think that you just need patience. You don't really need to know that much more. I would be surprised if they don't have a couple decent quarters in a row. Again, expectations are very low. If they see things are just okay and they start seeing an uptick in a couple product areas, you know, the stock should heal up 10 to 20% relatively quickly.
Okay, I'll remind everyone that we are taking questions, so we've already received a few, so if you want to get yours in, enter them into the chat section now. We're actually going to move on to some semiconductor charts right now, since we're on that topic. First is the stocks. You know, it's off about 14%. You know, what do you, from a very broad standpoint, what do you think of semiconductors now?
Yeah, I mean, so here again, it's one of the few areas. I think they've all been painted with sort of this PC cycle brush. Specifically, I think Broadcom and Qualcomm have been behind those stocks for quite a while. I think they set up really well, and it's not because of the iPhone. Yeah, they get nice business from the iPhone and the iPad Mini and the iPad, but the whole thing about those particular stocks is they sell into everything, right? So if Google has a monster hit with some Nexus 10 tablets, which are going to come out, or if Android goes up to 75% market share, those two companies just sell a lot of content into that mobility. By the way, they're both, Skyworks would be another name here, they also sell a lot of content into mobile PCs. So again, Windows tablets, Ultrabooks, kind of think about anything that needs to connect to a 4G connection, a 3G connection, a wireless modem, something like that. So, and then, again, my vision of the PC world is that we're all going to touch these devices and touch the screens. So there's more semiconductor content. By the way, Cypress is one of those plays in that area.
Where would you put it? NVIDIA. NVIDIA is another name I know you like. Where do you put them in?
Again, it's super cheap. It's probably it's definitely trading, I think, less than 3 times cash. It might be around 2.5 times cash. NVIDIA is really interesting because they are more levered to 2 growth areas. So supercomputing has been kind of a dull area that's really picking up steam. And so they make some really high profit chips that go into supercomputing solutions. In fact, Amazon just ordered a pretty big order from NVIDIA for some supercomputing chips. The Tegra processor is the mobility processor. So whether it's the Google Nexus 7, the rumored Nexus 10, and I think NVIDIA is well positioned. And then the other thing is, I'm not so sure that NVIDIA's sort of PC sales are going to be as bad as everybody thinks. So, you know, I think they kind of got this old cash cow business that everybody thinks of them by, but they got these 2 or 3 new divisions that are coming up and doing well. So again, I mean, you could throw Cypress's chart, NVIDIA's chart. We could probably talk about something like a Triquint Semi that's just been tortured. So again, there's all these semiconductors that are really cheap and expectations are really low. So that's been an area, one of the few areas that I've actually been increasing exposure to the last 2 weeks.
Okay, and that's going to bring us into the reader questions. Again, if you have a question, just enter it in the chat, and we will get to it. Easy Chip is one reader's asking about Easy Chip. What do you think of that stock?
Well, okay, so Easy Chip is one of these specialty semiconductors. They're levered to the networking space, and basically they really only make chips for the networking sector. This is a stock that I highlighted, I think, in mid-2010 when it was trading between like 12 to 15. It had a really good move. The beautiful thing about Easy Chip is almost everybody that makes routers and in these big iron switches, they're now designed into almost every one of those companies. So think Cisco, Juniper, Alcatel, Huawei, which is kind of in hot water with the U.S. government. But basically, Easy Chip is designed into those future product releases. It's probably not going to have a very good quarter right now, but in 2 to 3 years, their revenue base is probably going to increase minimum 3 times, maybe as much as 5-fold. And then what happens with Easy Chip, once they hit a certain level of revenue per quarter, they go from kind of not making much money to being highly profitable. So it's just a really unique name. It's a small cap, so it can be a little dangerous, but it's a nice growth. Put it this way, it's a nice growth name in the networking sector in a space that just doesn't see much growth currently.
Okay, we have a question from a TechStrat subscriber. This person wants to know, how do you think about your time frames and how you incorporate your market views into picking stocks, because correlations are so high, everything goes up and down at the same time. So
that's right.
You know, how do you make sense to make individual buys and sells?
Yeah, so I mean, the most frustrating thing for anybody that sort of has an investment mindset as opposed to a intraday to multi-day trading mindset is this incredibly high correlation environment that we've had. So basically what I do is I have a relatively concentrated list of names, you know, 35 or fewer, that I tend to put most of my money in, and I build core positions in those names. So again, you know, Fusion.io, Google, Apple, Broadcom, Qualcomm, things like that. Now the trick comes in, you know, you can't get 100% invested or probably even 85% invested until either you feel that things are cheap enough, or you need to have a certain amount of money kind of quote unquote in the kitty to be able to trade around core positions. So, I mean, I can talk about the fact that I've been in Google for a number of years. I don't even know how many trades I've done on Google where I've tried to grab 25 to 100 points on Google trades, right? Same thing with EasyChip. I might start buying and building a position in EasyChip at 33. Well, if it goes down to 28, maybe I buy 2 or 3 tranches for a trading position. If they go up 10 or 15 or 20%, I get out of those, but I tend to stay in my core position. So I sort of, long answer is, I try to have core positions that I don't let the market take me out of, but then I try to use market weakness to to enter trades around those core positions.
Okay, we have another question. What do you think of 3D printing, specifically ticker DDD?
DDD has been a very hot stock. You know, 3D printing, I think, is going to be a huge, huge industry. By the way, so the one thing that Hewlett-Packard could do something in a spectacular way on would be 3D printing. But right now, it's basically been a 3-company space: Autodesk, DDD, and Stratasys. So I don't know. I tend not to like names that I would almost say are pure cult and very, very sort of highly valued names. So my play on 3D printing, and I've been in and out of the stock, would be Autodesk, just because I think you have another business there, really good cash flows, and you have a margin of safety. Now, if Triple D or Stratasys were 25 or 30 or 50% lower, I would be talking differently right now. But those stocks are kind of high, but at the same time, their momentum, they could do well. The best way I can sum this up, I think 3D printing is going to be a monster industry, but what happens in these high-growth industries is a lot of new winners can end up coming in, and sometimes the first winners don't end up being the ultimate winners in the space. But I do like Autodesk, and Autodesk has been selling off recently.
Okay, we have another question. With front-month volatilities being low in Facebook, and that means the options, would it be smart to
I can probably interpret the question. Is somebody basically saying to buy puts to hedge it, or to buy calls instead of buying common?
No, a person's asking if they should sell options because volatilities are low, but I would think volatilities in Facebook are high. So, I mean, would it make sense to you to sell puts ahead of the Facebook quarter to kind of get long at a lower price? Does that make any sense to you? Yeah,
you could. I mean, let's say if you're collecting a massive amount of put premium, and you know, this would be, you know, what do you definitely want to get called and exercised. It wouldn't be a bad way to go. The biggest problem, I've seen people blow themselves up selling puts. So if you sell way more puts than you can afford to buy, if the stock goes to 15 or 16, it's going to be an ugly trade. But I mean, that would be one way to get long. You know, so if you want to talk specific option strategy, I would probably just rather own a partial position in a stock, and then maybe, so let's say if you want to talk in thirds, partial position of stock, you could sell a couple puts, use those puts to fund some calls. But again, you've got to be careful. You don't want to get yourself overly levered. So it depends. I'm not a huge, I like to sell call premium, and I do like to sell some put premium at times, but selling puts is probably not my favorite way to increase long exposure.
Okay, we have one final question, and it is, do you think HP will sell the PC business?
I actually don't. I think HP has kind of decided to go their own way. I think they probably see what I see. I think they do think that Ultrabooks and Windows 8 is going to be better, and I think they believe they're going to be able to make money selling that. I don't know if I think that's the best decision for them over time, but I think if I'm reading HP, I think they've clearly stated they're going to stay in the PC business. So
okay, don't mean to cut you off, but we're going to squeeze in one more question, and
sure.
that is, can you comment on Skyworks? Ticker is SWKS.
Sure. So Skyworks is Skyworks was one of my stocks of the year. The stock was trading in the high teens, low 20s last December. I had the position. I sold it in the spring after a pretty substantial gain. I want to say in the high 20s. I've kind of been waiting on the stock. They actually guided numbers up, and the stock got hit huge. You went down like 550 in one day. So I started buying Skyworks back again, and I've kind of been building the position over time. This is kind of one of those weird mystical positions. I think they've been caught in this huge risk-off trade, but I do like the name, and the lower it goes, the more I like it.
Okay, one more. Yeah, now that we're ending, everybody has questions. Okay, Cavium, C-A-V-M, what do you think?
Yeah, same thing. I was selling Cavium sort of above 34, 35. I didn't see where it closed today, probably close to 30 and a quarter if I had to guess. So I like the name. Now here again, 27, I like it more. 25, I really like it. But Cavium's in a nice position because Broadcom bought out their competitor. And there's not, it's one of those areas where there used to be a lot of competition in this space, and now there's not that many players. You basically got Broadcom, you've got Cavium, and you have EasyChip selling these highly profitable core network processors. I like every name.
Okay, another question came in the last second. Uplink Communications, OPLK. What is your outlook?
Yeah. So Uplink this is kind of one of the names I like to buy when the market gets tortured. Uplink is trading probably around 2 times net cash. So I'm trying to around 14.50 or below is where I like to buy the stock, and the cheaper the better. As far as fiber optics, something just has to happen. I mean, you've got a situation where networks haven't had material builds for 2 or 3 years. I've basically been wrong in this space. I've traded well in this space, but my core positions haven't done real well. So it's kind of one of these names that if you ever get a big optical refresh cycle and big network builds, the whole space is going to do really well. I would favor Finisar for a long-term hold over Uplink, but Uplink's one of these names. Anytime the market goes down 10 or 15 or 20%, a lot of times Uplink will go down twice that, and I think it's a name every single time.
Okay, we're running out of time, Sean, but in 10 seconds, if you can answer the question, is research in motion going to stay solvent?
From 100 on down. They can do some things to keep them in business, but I've basically been wrong. I would love to see the stock get back to 50. But for earnings, I'm going to say Sandisk.
And thank you very much, Sean. Thank you for your time, and thanks for all your wisdom.